Hello everyone, I'm Kunal Sodhani, a part of Treasury team of Shinhan Bank India. First of all, wishing everyone a very happy new year and hope this 2021 year, creates a lot of brightness in everyone's life. Obviously now let's move to the topic which we are into is the FX world again. Let's first review that what has happened in the past and how we have fared in terms of dollar rupee. So if we see the past, the broader range of dollar rupee had been in the range of 70 on the lower end till 77 on the higher end. So this has been the broad range of the entire year. Now if you break down into two parts, the first 3 months, the first quarter, we can say pre-pandemic, dollar rupee was hovering on the left where it was in the range of 70 to 73, more towards that side. As in when the pandemic things came into picture, risk off things started happening, equity started tanking, there was a lot of uncertainty, some kind of panic was seen, and thus dollar rupee did rally towards 77. But as in when these things gets sinking in to all the people in the market and the market participants, such kind of revive comes back into picture in terms of easing. So such kind of easing has already been started globally by central banks, and this easy money is flowing into the market, and thus after the panic mode of 77 which we saw earlier half of the year, we are back to around 73 half 74 levels. RBI in this year has played a very important role. If you see the FX reserves, they have grown from almost around $470 billion in March 2020 till almost $580 billion till date. That's a huge jump in the FX reserves. Our import cover has gone to 15 months. These FX reserves are also there to curtail any kind of further uncertainty or second wave or any kind of new mutant which we are thinking or planning about. How do we go about? So such markets, such kind of volatility, if it is created, RBI has hands-on reserves to curtail the volatility in the market. The other thing which we saw in the year, inflation obviously moving higher, past 7%, going above the RBI's band of 2 to 6%. So, but again, it is a short-term inflationary pressure, and there always, it happens that RBI cannot tackle two things at the same time: growth and inflation. So one has to take a precedence and an upper hand, and obviously in the current scenario, the focus possibly remains on growth, coming forward. Now let's move on to what is happening currently. Now currently, as we discussed, that a lot of easy money is getting into the market. Like the US fiscal stimulus coming into picture, in India announcing certain fiscal measures on sector basis, or any other country having their quantitative easing going on. So such kind of easy money obviously is for a purpose, but usually it's seen that such kind of easy money and the anticipation of further easy money due to the pandemic, such kind of money goes into the riskier assets. And when they get into the riskier assets, we see like cryptocurrencies going on the right, we see global equities rallying, and we see the dollar index falling. And when the dollar index falls in such a pace, where currently if you see it is around 90, and if it falls left below 89, there it is also boosting the Asian equities on the right side. Thus we are also seeing Nifty almost around 14,000 in the current scenario itself. So I think this easy money may continue for some more time. The anticipation remains in the market for some more time. A lot of negative aspects have been ignored by the market because of the anticipation of easy money. Cases have not reduced, maybe in India, I guess, but globally obviously because of the new mutant entering into picture. And such mutants are common in nature, because even if you see earlier pandemics, which if you see the history, these mutants are common in nature, but obviously anything which is common at times remain uncommon in the market, and thus there are some knee-jerk reactions which we always see. But luckily, equities or the riskier assets have not responded to it. Possibly the markets are more matured enough now as compared to the previous years, and this reflection is not seen. So the theme for next year, coming to the point, like how do we see 2021? What are the major events which need to be addressed, as a hedger, as an importer, as an exporter, as a speculator, or as a trader? So first of all, we need to understand, what would be the growth prospects coming in 2021. So last quarter usually have been good for a lot of sectors. Many of the companies, many of the corporates, when we discussed with importers and exporters, things have started moving in a very good manner. Order book has grown again. But again, moving on to the next year, uncertainty still prevails because of the pandemic, any kind of second wave, any kind of development of the mutants, the pace of the infection, the vaccination process, how long does it reach the common man. So these kind of questions will still prevail, which can create volatility in the market. So ongoing pandemic and the development, that is one. Second, we need to also understand what kind of easing policies are given further by the central banks, or the global central banks, apart from India as well. And if such easing continues, their impact will be dollar negative only, where the dollar index may move left further. Third, we also need to see Joe Biden, the US president, the next US president will be having his swearing in the month of January. So what kind of policies he comes out with, particularly with respect to China or globally also, and what kind of trade relations he maintains, that needs to be watched out. Third is our own India's fiscal budget, or the union budget we term it as. So what kind of fiscal measures after this pandemic is already into picture? What kind of fiscal measures are we coming out with? Where is the money flow going? In what sectors are they going? So this budget will be extremely important to watch. And last important development, we have already heard of and already read about the Brexit, EU and the UK deal happening. Though yes, the deal might have happened, but I think we need to understand the nitty-gritties of the deal, which we believe that this will unfold with time. So no matter GBP dollar or euro dollar possibly have rallied and they are hovering on the higher sides, but the clarity on what kind of deals and what kind of trade arrangements are made between them and apart from them with other countries, with UK, those things will be important to watch out for. Currently, our indication or our view remains that yes, dollar weakness still curtails and it is still prevailing in the market. It is obviously a crowded trade, yes, because a lot of people are all talking about dollar weakness because of the ongoing things which are happening. But in the near first half of the year, this may still continue. That's what our personal view is. Particularly on dollar rupee, if you break down, there is a possibility we can first test the near all-time low in dollar rupee of 70 to 75. So those levels can be tested, and any kind of convincing break can definitely lead those levels to 71.80. So this is on the support side. Now, if we talk about the resistance side, if we think of any uncertainty prevailing, obviously we can see a spike in dollar rupee, and any kind of trend reversal. If you want to see any kind of trend reversal or the bulls coming into the party, the dollar bulls coming into the party, I think a convincing break on a closing basis of 74.20 can suggest dollar bulls back into the market. So broadly, I think weakness continues, dollar weakness continues, and with a lower end of 71.90, any closing basis 74.20, we can still eye a band of around 74.5, 75.5 to prevail, and if the closing is above 74.20 on a weekly or a monthly basis. So that's all from Shinhan's side. We continue and we will always continue to deliver any kind of updates on the FX front. Once again, wishing everyone a very happy new year. Thank you so much. Thank you.